Hello and welcome to our weekly market alert video for the week ended February 4th, 2022. And this week we got the jobs numbers, and wow, the jobs numbers were way more than the consensus of all of the analysts and the economists and everybody else thought. Over 400,000 jobs. And, I always marvel at these large companies with all these analysts and millions of dollars of analysis and people who eat, drink, and sleep jobs, economists who eat, drink, and sleep jobs. And it is amazing to me how often they are completely wrong. So anyway, in this situation, the vast majority were completely wrong. They missed it by a mile. Be that as it may, what does it tell us? Well, it tells us what we've been telling you, what we've been chronicling for you and reporting to you for the last several months, and that is that the economy is healing from the pandemic, and we believe that the pace of that healing is accelerating. The numbers of Omicron cases is dropping dramatically. In some places, it's down by 90%. And so a rapid reduction in that is giving people optimism. People are starting to go back out again. And the jobs numbers, people thought that Omicron was going to cause stopping of hiring and, that kind of thing. It didn't. So it appears that we're starting to take the whole pandemic in stride. We're starting to get back to normal and think past it. And so that's a good thing. As people go back to work, companies have more people producing products, providing services. They can make more profit. And profits, as you guys know, is what we believe drives the stock market, the S&P, the Dow. Stock prices are driven by profits. And if profits are rising, therefore stock prices should as well. Now, investors, on the other hand, they look at a big jobs number as like, oh no, what that means is the economy is actually growing really fast, and therefore the Federal Reserve is going to raise interest rates, and we can't have that. We don't want higher interest rates. We like free money. Well, if you look back at previous bull markets, times when the market was rising very nicely, what you'll find is that during those periods, in the vast majority of cases, interest rates were rising at the same time. Why? Because if the economy is getting better, then inflation is heating up, and therefore the Federal Reserve is raising interest rates to control that. So it just makes sense. So it's kind of weird, but you may not like higher interest rates, but you should want them because that usually means that we're in a growing economy, and therefore we should be in a bull market. Now, having said all of that, and again, we've told you that our fearless forecast for this year is Dow 40,000. We still stand by that, and we think it'll happen. But at the same time, we always have to look at the exits and be ready to protect ourselves should something come along to upset the apple cart. And that certainly could happen. The whole thing in Ukraine with Russia, the Chinese are talking about potentially invading Taiwan. Maybe they both do it at the same time and say, okay, guys, let's see if you can take us both on at the same time. If that happens, we could have a world war. We don't think any of that's going to happen, but it could. And if that were to happen, then all bets are off. That's why we have our invest and protect strategy, because things can change in the blink of an eye. And if they do, we want to protect you as much as we can from that big downside. So, once again, I hope you have peace of mind. I hope you are enjoying your second childhood without parental supervision. I hope you are letting us do the worrying for you so that you don't have to. And if you are, then thank you. And thank you for watching this video. Thank you for being our client. We cannot tell you how much we appreciate the trust that you place in us. We work every day as hard as we can to earn that. We know that every day we have to earn it all over again, and we accept the challenge, we relish the challenge, and we are thankful to you for that. So, once again, thank you for watching this video. Before we go, if you haven't watched the video on the changes we're making to our investment experience that we sent out a couple of weeks ago, it's rare that I say mandatory to a client because you're the boss. Mandatory. You need to watch that if you haven't. Also, for those of you who have, we're planning on sending out your DocuSign packets in the first week or thereabouts in March. So watch for your emails for that. So I'm just giving you an advance notice that when you get it, you need to DocuSign it and send it back to us as soon as you can. All right, so thank you for watching this video, and we will talk soon.